Let's go to Garth Bray from BusinessDesk. Thanks to our partners 2 Degrees, we're looking at all the day's big business stories. Garth, good morning.
Good morning, Ryan.
Let's start with Maui. I just spoke to Mercury Energy about their results and mentioned the Maui gas field.
Yeah.
The rumours about a potential imminent closure.
That's right. I mean, this is fair to say OMV, which is the Austrian owner of that field and operator of that field, has said to BusinessDesk that the 50-year-old field is approaching the end of its productive life. It hasn't confirmed when it plans to decommission it, but rumours about that imminent decommissioning are just swirling through the sector, particularly since last week when there was quite a a high-level meeting of energy sector CEOs, where our energy correspondent Ian Llewellyn's managed to talk to about 5 of the participants at that meeting on confidential terms, basically, keep your identity secret. They're saying, yep, look, they weren't directly addressing Maui, but they were talking about the problems there, and they're talking about how OMV is facing sort of difficult, expensive and uneconomic situations with trying to get the last bit of gas out of a field that supplies 20% of the natural gas that we burn in this country.
Big deal.
I mean, previously they'd sort of said 2027 maybe we had reserves through to there, beyond there, we're not sure. It's now looking increasingly possible that it could shut during an election year. Who wants to be the government that's having to deal with that? This is the kind of field that, if it comes out of play, means major manufacturers like Methanex, effectively would be struggling to stay in the market and so on. So if we've got a situation where we're starting to shut businesses down because we haven't got power, that's a real problem.
Yeah, that's the third world stuff. Now, well, it's already happened, hasn't it? We've seen that happen already. Now, tower insurance is moving to price house by house in some cases.
Yeah, that kicks in from today, and this is very interesting for our large listed insurer because they've had a couple of the Swiss Re and I think a Danish firm as well, or a Dutch firm, looking at how you price flood risk and landslips, and they're now saying for about 10% of customers that's going to mean substantial jumps in their premiums, but for 90% you could save $70 a year on your house premium. If you're, though, on a flood zone,
careful where you buy.
Near the river, exactly. And I mean, we're talking like $100 for about a third of their customers, maybe, I think I'll just double check that one, $300 or more for 2/3. Some of them might be getting a big call.
Right.
And they've done some polling around this as well, Tower, and they've shared some of the results with us. They're saying that 2/3 of people that they spoke to said it's a great idea, yet share the risk, basically, according to this kind of stuff. If you're looking at trying to sell there, well, 2/3 of people wouldn't buy that place if it's at that higher risk, and a third would want it cheaper.
Totally.
So this is going to have some impacts on the rest
property
of the
values, all sorts of stuff.
The whole thing.
You'll be back with us a little later in the show, Garth. You've got results today, Fletcher and Spark.
Yeah, obviously some big numbers coming there, and we'll see what's happening with Sky City. Maybe if their trading halt eases,
And we didn't even get to the global dairy trade, which is down 0.3%, but we'll talk about that later too.
Talk about it later.
All right, see you soon. Garth Bray, Business Desk, and we talk business every day thanks to our partners 2 Degrees.